hold up, rewind. We thought inflation was leaving, but it's still crashing the party. We'll show you why in just a sec. But first, a quick montage. Grocery bills, still going up. Gas pumps, still stinging. And take a look at this one, a for rent sign. Still shocking. Now let's set the scene. Back in the spring, inflation was running hot. Prices were soaring and the worry was that it would stick around. But then something interesting happened. Experts started predicting that inflation would cool by now, that it would drop back to normal levels. They pointed to all sorts of indicators: supply chains reopening, the Fed raising interest rates, people returning to work. All signs pointed to a clear prediction: inflation would leave the party. But wait a minute, we haven't heard the punchline yet. Why isn't inflation gone? Well, let's go back to the basics. What is normal inflation? Think of it like a slow dance. Prices move up and down a little, nothing too crazy. On average, prices increase about 2% a year. That's normal. It's not a big deal. So when experts said inflation would go back to normal, they meant that slow dance. So where does it still hit hard? Food, rent, gas, and medical bills. And those aren't just numbers or charts. Those are things that you pay for every day. You go to the grocery store once a week just like clockwork. You pay rent on time every month. You fill up your gas tank to get to and from work. And you visit the doctor because your health is important. Those are the moments that inflation still packs a punch. Why hasn't it packed up and left the building? Well, there are still a few factors keeping it here. Supply chain issues are still a thing, whether it's computer chips or avocados. Global conflicts are also affecting supply chains and prices. Labor shortages are also still an issue in some industries, which means higher prices for services. Until those factors cool down, inflation won't leave the building. Who benefits when inflation sticks around? Some companies and investors do pretty well. Investors who own stocks in these companies can make money. Companies can raise prices and make more profit. But who suffers most? Families and small businesses. They can't raise prices like bigger companies. They just have to eat the extra costs. And families can't keep up with the rising expenses forever. So what does this mean for you? Here's the deal. You need to protect your wallet. Watch out for those sneaky price hikes. Cut back on unnecessary expenses. Invest your money wisely so it grows faster than inflation. Look for deals and use coupons. You might feel like you're missing out on the cool new gadgets or the fancy dinners, but saving money now will pay off later. Plus, you'll have more money to enjoy your golden years. Trust us, it's worth it. And hey, before we go, quick disclaimer: this is not financial advice. Just some friendly tips from your favorite finance channel. Will inflation ever leave the party? Well, that depends on a few things. Will supply chains get smoother? Will the global conflict cool down? Will more people return to work? If those things happen, then yes, inflation could leave the party. But until then, it's still crashing the party. So the next time you see that for rent sign or that grocery bill, remember, inflation isn't done yet. Now it's time for your assignment. Drop a comment below. How is inflation crashing your party?